You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome to the option block. Everyone's favorite. I hope it's your favorite. If not, well, maybe we'll see if we can win you over the course of the next hour. Of course, this is indeed the program where we break down all the fun, interesting, and just somewhat, we hope, insightful stuff that will lead you to a fun and hopefully fruitful options trading career. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to sink your teeth into, including many great archived episodes of this fine program, the Option Block. You find it all, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, click around, check out some of the breaking news from the options market, check out some of the analysis, unusual activity, our much beloved, much maligned Tesla tracker, depending on which side of the fence you fall on the much beloved, much maligned Tesla, or sign up for our newsletter, do all kinds of fun stuff while you're there. Of course, check out the other shows as well. We've got quite a few. If you want to just mainline the radio, iTunes, or if you're the Android folks, Google Podcasts, or I like Pocket Cast myself. It's a good one. It can go cross-platform. It can go iOS. It can go desktop. It can go Android. Since I have all three, I use that, and it kind of syncs everything up. But you can use whatever floats your boat as long as you're able to check out the show. And, of course, for those of you who are hardcore, you can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, M-I-X-L-R. Hope to see you in there with the cool kids listening to the show as it goes live. And joining me, of course, actually before, however you listen to the show, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We love it all. At Options on Twitter, or hit us up on the website, or wherever you like to send in your stuff. It's all baked into the app as well, so you can do it all there. And joining me on the old program today, we got a bit of a truncated panel today. Uncle Mike Tussaw out on assignment, but don't worry, someone else is back from assignment. He's the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Sir, welcome back to the show. First off, how was your vacation? And then B, do you remember how to do this thing? First off, you have to hit the unmute button if you want to talk.
You know, I actually did hit the unmute button. That I have a sticky note on my computer screens now that says hit the mute button.
There you go.
I do. I swear.
Like I swear.
The vacation was nice. The taskmaster Sebastian released me for a week, and I hung out in Cape Cod with family. So before all the summer throngs set in, it was very relaxing, I have to say.
Yeah, the Cape is kind of that summer vacation area for the New England set. If you've never been up there, listeners, it's kind of the place. And you're right, you kind of want to go now because once you get much beyond early June, then it's one of those vacation spots where the population just soars 10x during the season, and it's kind of quiet the rest of the year. So not a bad time to go if you are going to go. Check out the dunes, do a little biking around the dunes, check out the beach, do some crab, and all the other silly stuff you do out there in the Cape. Meanwhile, time for silly stuff. It's time for us to keep on rolling with the show right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is going on in today's trading activity. A bit of a weird one, kind of following hot on the heels from Friday's activity. If you were listening to our shows on Friday, I think it started happening during vol views, where we were talking about one narrative during the day of like VIX coming in during the week, and how the Comey bump didn't really last, and the Britain vote bump didn't really last, and what we're going to do, how we're going to find some vol. And then right pretty much towards the end of the show, all of a sudden, we started back to the last seconds of the show, really. We started talking about, hey, what's going on with this little bit of a sell-off? And things are starting to move a little bit. Things were off. The NASDAQ ended up selling off even as the Dow was pushing new records. Bit of a weird disassociation going on out there. Seeing a similar narrative unfolding today, a bit of a disassociation. This thing, time to not rally, and everything's off, but some are off more than others, shall we say. S&P off about 0.2% of the Dow, similar levels, but the NASDAQ leading the charge, off about 0.75% to end the day. It was down more intraday, so not a lot of love for the tech-heavy stuff, and interestingly enough, even though the S&P wasn't selling off hard, we are seeing a little bit of this love come roaring back into ye old VIX cash. Doesn't seem like that long ago. In fact, it was about a session and a half ago, we were talking about VIX hitting historic new lows of around 9.37. It was, I believe, number 5 in the top 10 intraday prints for VIX. Not closes, but intraday prints out there for the VIX cash. And then fast forward a session or so, and all of a sudden we're flirting with the 12 effect. Irony or not, perhaps, depending on how you're looking at it. Today's high was exactly 3 handles above that. So it hit a high of 12.37 today out there. So all of you who were saying, withered the vol, there you go. You got a little brief flirtation with it today. And it was brief. It came off again towards the end of the session. Closing still up, but off the highs, up about nearly a full point, about 0.85 or so, up there to about 11.55 or so out there. So a lot of weird stuff going on out there, just from a vol perspective. So let's start there, Mr. Rock Lobster. Weird day. Kind of one of the few greens on the screen was the VIX, which is, it's been a while since we've said that, really. So walk us through what you think of this disassociation that kind of started on Friday, continued into today, and are you feeling this VIX bump? Is this the much talked about moment where the feedback loop breaks and VIX starts roaring to the north, or is this kind of like we've seen many times now, a few little dead cat bounces and then right back down, threatening the 9 handle again?
I know. You know, it's fun. But the thing with trading or just trading options is you're just trying to look for what you've seen before, right? It's nothing really, you want to sell some juice. When have I seen this before? When is it expensive? When is it relatively a good sale? And the thing is, this generation of vol traders is colored by the financial crisis, right? Where if you started trading in 2008, you think like 20 VIX is normal, or, wow. And, we had years of the VIX, taking a while to make that slow climb down. And then you had the euro falling apart. So, you definitely had some things. And then, of course, vol trading exacerbates it. But for the next generation, low vol for a while might be it. So depending on, most of the volatility in the White House has been coming out of tweets. And it sounds like unless the current president probably puts his foot in it again, as far as from a vol point of view, it's looking like there's not enough fire to make VIX go higher. If on a normal day, I would have said, okay, Amazon's down 100 points, or at some point 75 points in 2 days. Apple was down, 10 or 11 points in 2 days, something like that. Google was down 50. And the VIX is still below 12. You have like 3, 4, 5% moves in the underlyings, in the tech underlyings, like the bellwethers, and VIX is 12. Actually, it rallied to 12. Wouldn't you normally say that this is? I do not know this market with which you speak of. I do not understand this market, right? So there was some rumor sovereign wealth fund might be selling their top holdings at the top, I might add. That could be it, but I think the selling, and the next thing was Goldman, I guess they weren't long enough, all the tech, so they needed to get back in and buy some, so they put a sell, some sort of sell or reallocate rating on it, but the sell-off in tech has not has not it has not bled into the rest of the stocks. I mean, the financials, if tech is falling apart and the financials are rallying, net you don't have a lot of volatility, even though there's some volatility between sectors. So, everything's looking like it normally would if some large holder of technology stocks just decided to dump, $50 billion worth of stocks or something like that. You're not seeing the bounce. So the second part is, is it strange that somebody large just wants to take profit somewhere? No. The only thing I would say is the market is still looking for a little bit more volatility in the underlyings, a little bit, because we have a fairly flat term structure for VIX right now with where we are. So I would say, at least looking from that point of view, most equity traders, or at least the vol future traders, aren't looking for a big push higher in VIX cash. Unless more news comes out, or the Fed does something that surprises everybody, it would not surprise me to see VIX at 10.5 at the end of the day, depending on if technology starts to swing to the upside hard, like on a bounce, everybody say, oh, there's nothing wrong, so everybody piles back in, which could start to stretch volatility in the upside again. So I would be, I would say, is there anything out of the ordinary on this? I would say everything seems to be pricing normally. But as long as tech is going down and financials and, ExxonMobil are going up, that's going to be relatively flat vol for the way the index looks at volatility. And that's what we've got. So if we see the low 10s again by the end of the week, I'm not going to be surprised.
Yeah, I think I could feel you. It doesn't certainly seems like past is prologue all the time, but recently at least fading all of these little spikes has served you well. I don't know if this little disassociation here between NASDAQ vol and S&P vol is enough to break the quote unquote feedback loop that everyone's talking about these days. But at least for the time being, it seems like it was kind of like not the Comey bump, but a few weeks ago with it was Comey related. It was the special counsel bump. And we saw that nice little spike in VIX, and then it kind of came off just as quickly almost as it came in. Not quite so speedy today, but still fairly aggressively. By the way, Andrew, we were talking about interesting stuff on vol views last week. I wouldn't mind getting your thoughts on it as well. I don't want to preface your thoughts for the poll in the mail block too early, but we were talking about almost two kind of opposing viewpoints on VIX right now, and the house you talk to, and maybe their position will dictate how they feel about VIX. But you had Goldman on one hand, I believe their CIO coming out last week and saying, kind of echoing things we've said on the network in the past. It's kind of hard to look at a VIX of around a 10 handle and then look at all the unknown unknowns and the known unknowns swirling out there in the macroeconomic ether, and then put those two together and equate them. Even though the hard math of implied vol isn't there, therefore realized vol shouldn't, or excuse me, realized vol isn't there, so therefore implied vol shouldn't be there. It makes sense, but it does feel like there should be a little more going on out there just from that level. I can certainly understand that sentiment. On the other hand, you have Barclays coming out and saying a lot of the people are saying VIX is too low, but on the other hand, a lot of the juice that we do have right now, what juice there is being found from the convexity of being priced into these out of the money puts in the S&P, and if those would start to come in, and granted that's a big if because they're going to be bid for a while because people think this market's kind of top heavy, but if those were to come in, that actually could kick VIX down to an even lower gear. We could see it a handle and a half lower, so they could be threatening an 8, potentially even a 7 handle. So kind of two diametrically opposed positions out there. I'm curious, where do you fall on that spectrum, sir? Which house, which paper do you agree with?
Well, I can't disagree with the Barclays camp at all, because if they take some curve out of the downside puts in the SPX, VIX is going to go lower. That's what's holding it up. And what's the at-the-money vol about? I think I've seen at-the-money vol last week in SPX 6%. So even if I look at it this week, it's still not that much higher than that. I've got, the vol definitely got a lift. When I was on vacation, I just looked today that so you've got 9% vol at the money right now. It was down to like 7% last week when vol was, when VIX was trading 10. So, but the thing with Goldman is it's, volatility is always one of those things where you're kind of the runner at the starting gate. and you're just waiting for the gun to go off. And, but you could get really old in those starting blocks until the gun fires. So, and of course, that would be you decaying. So are both camps, they're kind of saying the same thing. There might be a lot of macro worries, but it's mostly, okay, will something happen to the president? Will he get impeached, which would derail a lot of the reforms which the market seems to be rallying on? The ECB seems to be pulling back from their stimulus, not adding. Right now, the market seems to be rallying on central bankers getting out of the stimulus game and going back to just the regular economic game. So those, which were two of the biggest movers of the market from 2010 to 2000, let's say 15, even mid-16, are gone. Just everybody kind of assumes the central bankers are getting out and interest rates will slowly go up, and the big G7 governments are going to have to rationalize spending because now they got to pay money for they got to pay interest. So it's not quite there yet, but as far as big trends go, those I think are more vol crushing trends. They're not vol rising trends. The fact that central bankers have to actively get in the market, to me, is those were more vol inducing trends. And those are not, they don't seem to be the case right now. Japan, maybe being the exception because they can't quite figure out what to do to restructure. But so I can see that, but there's no reason for people to bid things up too much if there's nothing moving. It's just the way the market works. I just think most of the people just don't understand how VIX works. That's why we have an education business to teach people how to use it. But they just don't get it. And if Don were here, he'd be banging the table about realized vol. And I think I could go to all the financial outlets and look for realized volatility, and I wouldn't see anything anywhere about it. Probably the only place that it's discussed daily is in our chat room at Option Pit. Maybe a couple other places, I guess. But that's the thing that helps drive pricing and the perception of it. And right now there's, except for in the Qs, where you had massive moves and drove the short-term vol into the high 20s for a big index, which is a giant number. Think about it. If for the Q vol to be where it was, that would have pushed VIX up to 20, something like that. Would have been a huge move. So you can see relative how big that was. It just didn't come across just because of the way the massive, everybody jumped out of one pool and into another. So I think I like both of those. At least they're kind of getting out on looking at volatility the right way. Obviously, Barclays runs vol products, and Goldman is no slouch at trading volatility either. So I see what they're talking about. It's just the reality is you look at a chart and a 10 VIX at the bottom of the line. It's just it's not staying there. It just when it decides to go back up. But I don't think just the way things feel kind of just normally priced for what's going on right now.
That's no fun. Basic math, sir. What fun is basic math when you can get all hysterical and histrionic and all sorts of other fun stuff today? It's funny that, it's hard to argue with the feeling and sentiment of the CIO. It's also hard to argue with the basic math, which is that if realized vol is anemic, all other things are pretty much moot. And so it's kind of interesting, that we do have these diametrically opposite. It will be interesting to see, Manish and his team over there at Barclays. I'll have to get them on the show one of these days to talk about that stuff. They usually dig up some pretty cool stuff. And they like to find interesting nuggets out there in the VIX realm that other people aren't looking at, and I haven't seen anyone really talking about the impact of just the puts in particular. So it's kind of interesting. We'll see how this plays out. We got a question out to you guys. You guys are making your voices heard. We'll get to that in a little bit. Before we roll out of the trading block here, Mr. Rock Lobster, there is some action these days, and I know one of your favorite sectors of the market here, of course, the gaming sector. I'm not talking about the gaming as in casino gaming. I'm talking about the gaming, the hardcore game. I know you're a hardcore gamer, so you're always talking about Take-Two and Activision and all those names. Well, the big E3 2017 E3 Expo going on. So all the big gamer names showing off their wares for the year. So you got your Microsoft, your Sonys, and a bunch of others out there kind of showing their wares. I think Sony might be going off as we speak. So all the gamers are tuning into that. So I thought we'd hit on that really quickly and see how these things are moving. As a result, you got some weird things. Of course, you got Microsoft and Sony, which are two kind of big and diversified entities. So the gaming sector, particularly for Microsoft, gaming is a small part of what they do. Obviously, Office and everything else, still Windows, huge, the big drivers of what they do. So the Xbox is small division comparatively speaking, but still interesting stuff. And they're feeling a little bit of the heat today, off nearly a full percent. They're trading shy of the 70 handle out there. I'm not seeing a huge bump in ADV out there for them, but they are up nearly 2x in the ADV today, about 80 extra thousand contracts, and they average about 100,000 today. So not a bad little pop for good old softy. I guess the folks out there maybe not liking their big press conference. Sony hasn't really popped off yet, so they're kind of unched today. I think they may be going live as we're doing this show, so we'll see what they announce. Maybe that ADR will start rocking and rolling. Of course, the big publisher EA Electronic Arts, that very gaming-centric, gaming-focused name, they're doing about 1.5x ADV, off about 1.5% today. So a little bit of maybe a buy the rumor, sell the fact going out there. Also maybe feeling some of this dragged down by the broad tech sector not doing so well today. Probably a combo of the 1-2 punch out there. So yeah, they're popping a little bit from a volume perspective, even though the underlying off a little bit. Rock Lobster, one of your favorite names, good old Take-Two. I don't know if you sling this one anymore. I know this one used to be on your radar. Another big publisher of games. They're doing over 2x ADV today. Pretty evenly split puts over calls. Puts slightly a bit at 1.3 to 1 puts over calls out there. They're off nearly 2% as well. So a lot of selling across the board in the gaming names. Some of this obviously tech related, but perhaps some of it also just from the general maybe buy the rumor, sell the fact going on out there in the old gaming space. Let's look at one of my old favorite stomping grounds. Haven't been into so much lately, as is a little bit richer than it used to be. It was a great premium selling bullish risk reversal type name back when it was trading in the 11 to 15 handle range, which it did for a long time. Once it broke north of 20, it's kind of changed its dynamics a little bit different beast. Activision, I'm talking about here, of course, trading today $56.76. The lead loser of the bunch, off over 2%, 2.2%. They were down, I think, with 2.5% or more intraday, so not a great day for Activision. Surprisingly, though, calls outnumbering puts 2.5 to 1. They're doing about 3x their ADV. They average a little over 10,000 contracts a day, doing nearly 30,000 today. So there is some action to be found. All these people out there who are saying, there's no vol. Well, maybe today notwithstanding from a VIX perspective, there's no vol. Where can I find some action? There you go. You got to find some events that could drive some sectors, and gaming certainly moving, certainly getting a little bit of vol going on today. Are you still out there slinging the Take-Twos and the EAs and all that stuff, Mr. Rock Lobster? I know you were a big Zynga head as well for a while there before cooler heads prevailed out there.
I have given up on Zynga once they decided to leave gaming. When they decided to say, I don't know if we want any of that like real gambling, because that's real money. So why do you want any of that? Even Zynga's actually, it's recovered a little bit even lately. It's not in the 2s anymore. It's in the 3s. So maybe they're worth more than or it just might be the value of their building in San Francisco keeps going higher and higher and higher every year. That could be it. But I haven't done anything much with Take-Two or Activision when they became real stocks. Before they looked like perennially undervalued stocks. So it's always easy for me to write puts on that kind of stuff. And then once they do not become perennially undervalued, I don't like selling puts on them anymore. So but looking at that, I think most of the drop off in those, and by the way, do any stocks really perform well after they report? They have these big conferences, Apple always does their big, developer conference, and there's always like this, everybody piles in, they buy the juice, and then everything comes out like, okay, we have a different version of our iPad. Everybody goes, and then, there's just sadness and saggy volatility and all the rest of it.
Buy the rumor, sell the fact was born out of hard-won wisdom, sir. It didn't just materialize in the ether. You get slapped in the face 9 times. The 10th time, you look away, So people learning over time exactly how to play these things.
I think they finally figure that out a little bit. So anyway, as far as those sectors go, it might be a little bit of, okay, buyer's remorse and everything just kind of sad, and you're not getting anything really great and new. So that's what at least those names look like to me. But we'll see what happens if there's any actually real news coming out of the gaming sector.
All right, and we'll keep on rolling. Speaking of news, it's time for some news in the unusual activity side. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Welcome to my favorite part of the show. One of them. I like your questions, too. I shouldn't say that. I shouldn't offend you. But I do like this part as well because we get into the weird, the wild, the wonderful, the wondrous, the whimsical, the downright silly paper that is lighting it up in the old options market today. We had our pick of stuff today. We're going to kick things off. Too bad Uncle Mike isn't here. I know he's a fan of this name. He likes all the X's. But we're going to kick things off today out there in XLK. This is the much loved, much talked about Technology Select Sector Spider Fund. Closing today, $55.69, off about a little more than 0.5% on the day. It's the name that does about 18,000 contracts a day. Today doing a fair bit more than that. Doing about 123,000 contracts out here today, and it looks like maybe an interesting bit of time spreading, rolling, call it what you will, going on out here today. It started off catching our eye with the July double puts, aka the 55 puts. Started going up with two blocks, totaling about 15,000, about or close to it. We saw 7,400 going up. Looks like paper they're traded near the bid, so probably selling. $1.11. Again, this spread was kind of tight, so the execution could be a little bit misleading. And then a 7,300 or so for another $1.09, so doing right around 110 there, or close to it on splits. Again, sold or looks like executing close to the bid there. Open interest is about 15, or actually 16,000. This is most likely closing out the line. Well, there were 15,579 open, 15,593 traded. So go figure whether this is closing. It does feel like that. XLK, of course, threatening that level today. Someone deciding maybe discretion, the better part of valor, and then deciding to roll out a little bit, perhaps a little bit of a funky one. Rolling all the way out to SEP. Looks like the SEP 50 and 55 puts going up today. Looks like a bit of a spread, a 5-point spread, actually. Looks like paper coming in and also selling the 55 puts for $1.84 and then buying the 50 puts. So that would be more of a time stupid, which is kind of funky, which is why we have to dig into that execution of that 55 puts a little bit to see exactly where they went up again. Sometimes just because where they went up on the spread doesn't tell you exactly what happened on the old strike there as well. Open interest is pretty sizable on these, about 21,000 on the 55 puts, 90,000 on the 50 puts. We are seeing a little bit of vol kind of coming in a little bit here on these 55 put strikes. That would kind of lead and play into the selling theory, which is kind of funky. So closing there, some long puts in July, and then rolling out to a SEP short 50-55 put spread. Kind of a funky trade either way. That's why it is the odd block. It means it is kind of funky. Let's look back at the year that was out here in XLK. We kind of talked about this one before. It's been kind of all over the place. As getting as low as about 41 and change back in June of last year, then rallying all the way up to about 57.5 or so. Right before that was a couple sessions ago, before giving up the ghost, getting its wings clipped down about 2 handles now from there. So a lot of funk in the air here, Mr. Rock Lobster in XLK. Give us your thoughts. What would you like? What are you feeling here? I know you like looking at XLK. Maybe perhaps not as much as Uncle Mike, but still, we'll allow you to weigh in on the subject. What are you feeling here in these funktastic put/time stupid / roll here in XLK?
There's so much paper going on there. I'm looking at the Julys. It looks like they were closing. However, end of day volume is slightly higher than open interest, so we'll see how much of that would actually be closing. But it looks like the July doubles were sellers. I think sellers just took their money and they're like, okay, we got a little pullback in this. And if they were hedging and they look like they might be rolling, I'm not quite sure about that. So it's a lot of let's just call it kind of conflicting volume, because there definitely looked like there was almost stupid put buying, one buy on two different strikes, and then looked like somebody closing some July doubles. So, it all went up at different times, but the flavor of the trades are kind of somebody's taking their money from one place and they are moving it to another place. At least it's kind of what that's like the SEP July. It has, let's just say those trades have that flavor. And then there was just huge buyers of just June premium in general. So maybe thinking that we just bounce right back up again. That's at least the way I see the unusual activity today in XLK. But I guess we'll see tomorrow. You have to check a little of the open interest on the Julys to see if that was additive or not, if somebody just wanted to load up and sell more of the 55 puts.
It's so close to the OI. It's like a 20 lot over the OI. So I got a feeling that maybe someone else piled in, but a little
small
20
pile.
A little 20 lot piler. But I think in reality, I think it's probably it has the whiff of closing. You're right. We have to pay attention to the numbers tomorrow to make sure. But it has the whiff of closing. And it could have been, you're right. It could have been someone who also just has the 55 puts and they're a little bit indecisive. Also, it'd be kind of odd. But you can also have the 50 double put spread on long out there. And Seppin decided to close both of them today. So that it is certainly possible. We've seen funkier things. Speaking of funky, let's move on to our next name, our next victim, UPS, the old United Parcel Service. Ticker symbol, again, UPS closing 108.94. One of the few bits of green on the screen today, up nearly $2 or nearly 2% on the day. So not a bad day for these shippers. They've been kind of volatile and kind of active of late as the economy seems to be shifting all into the Amazon e-tailers away from the brick and mortar retailers. Guess what? You got to ship all that stuff. So it's been a nice boon for the FedExes and the UPS, as well as some of the crazy stuff like dry ships going on out there and a bunch of other stuff. Shipping sector has been interesting of late. What's the last time you could really say that? A couple of years ago? Probably not. So it's been interesting to watch. And today, an interesting one for UPS. This is the name that does about 10,000 contracts a day. Today, going about 40,000 and change, about 8.5 to 1 calls over puts. So big call volume out here today, and looks like a lot of this going up in a pretty sizable roll. Interesting though, Mr. Rocklop, so it looks like someone was kind of swinging for the fences, and then it doesn't look like it's quite going to pan out in time. So they're still feeling the love. They're still keeping that hope alive. They want to just buy themselves one more week. So what we saw out here was some pretty sizable trading, starting with the just straight up monthly June 110 calls. Paper blasting out a block of 9,190 of those for 28 cents. A total of about 10,800 and change going up. So about 1,000 or so extra, nearly 2,000 piling in at the end of the day. Total open interest on that strike of about 20,000. And then turning around and buying themselves again one more week, going out to June, expiring on the 23rd, 110 calls as well, picking those up for 64 cents. So spending about 36 cents to keep that hope alive for another week. Only 95 contracts opening on the 110. A total of about 12,000 and change trading on that strike today. If that is all his OI, then he may have a few more to go on this. But he's feeling the love. He's not quite feeling that we're going to make it there by June expiration, which is, of course, coming up soon. So he's deciding, discretion can be the better part of valor. I'm going to give myself beyond this week, another week, to see how this plays out. I'm looking here at the chart, the one-year chart of good old UPS. This thing has flirted with nice levels that would certainly make our friend here very happy. It hit about 119 and change, back in December of last year. That was the 52-week high. It's kind of been a little bit rocky and turbulent since then, getting clipped in the last earnings down from, or a couple earnings back actually, in the January, so in the beginning of the year here, getting clipped from about 111 all the way down to 109 or so, and actually dipping it down to like 103 the next day. So nice clip after earnings, then kind of been very turbulent ever since. Our friend here clearly feeling we're going to be retesting those near-term highs and going to be doing it pretty quick. Mr. Rocklobster, what do you think of our friend here who's keeping the hope alive, if only for one more week, and he's willing to spend nearly 40 cents to do it?
I think it's a good idea that he's rolling out for another week. What is making UPS rip? It makes me want to check the news, because it's actually one of the few, you would think, kind of riding the Amazon coattails and everything else, that it would be doing better this year, but it's actually down like 15%. something like that. So that's kind of a little smack daddy. Maybe just because, I don't know. Is Amazon going to start droning everything? I don't know. But it's strange that, I don't know, whatever, maybe somebody upgraded it, or again, sector rotation that has kind of the smell of that. So, okay, we're going to sell the Amazon, but we'll sell the Amazon at 200 times earnings, but we'll buy the UPS at 18 times earnings. That's shipping all the Amazon stuff. So I could see that as a reasonable flip into UPS, but that's a lot of 110 strike. And when you're running out of time, every day you lose about 25% of the value of the option on the last week of expiration every day. So, a quarter's gone, and then blah, you got nothing left. So I think it's best to take what they can get on the pop and move along smartly.
Speaking of moving along, I don't know if it's smartly or not. These, we talked about these a couple of weeks ago, Mr. Rock Lobster, when we first kind of uncovered these in our daily Tesla tracker. We've been watching them now. A lot of people have interest in these. Still, the number one with a bullet open interest, big position out there in Tesla are these Jan 2019 50 puts. And the weird thing about them, the funky thing, we have all kinds of people chime in with what their thoughts are on what these puts are. They're crazy catastrophe hedges. Are they people hedging their Model X's? Are they hedging OTC CDS positions, et cetera, and so on and so forth? You guys have really hit us up with all sorts of your reasons why these things exist. But the funny thing is they continue to trade. They continue to add. In fact, 212 of these things traded again today. The open interest is now 27,231. They've added over 2,000 contracts to this thing in a little over a week since we first started watching it. It's been about 10 days or so. It's added over about 2,000 contracts. So this is all sorts of funky. I know you got some thoughts on this, Mr. Rock Lobster. You've been pondering it deeply over your vacation there. What are your thoughts on these crazy puts and the fact that they keep growing?
So I have a trading friend, Bertie. We're talking about Tesla, and there is very large short interest in Tesla, enough to bring the borrowing cost to short stock into pretty expensive realm. It has since pulled back a little bit. So normally when the borrow cost goes down, a lot of people that were shorted have covered, which means a lot of the buy support for the stock should starting to subside a little bit. What's funny about that 2019 put is what's it going to be worth even with Tesla's going to $50? I mean, a year from now, as long as you have time, it still could be worth something. But it is the cheapest put out there, so that's what people are buying. But we'll see what happens. I think there was a lot of short interest in Tesla. People just got squeezed. I think that the last 150 points were a bit of a surprise. I could swear in January this thing was trading 170. Let's see here. Let's see, in January of this year, Tesla. January, it was trading $211. Mid-December, it was trading 200. So it's still, that's a $140 move. That's enough to squeeze funds that were able to short it aggressively at that level, and now they're down, 55% at least. And so a lot of covering has happened. And I'm just looking at this, and puts are very expensive in here. It doesn't mean it can't gap up another $30 for no particular reason. I think the stock is now kind of in no man's land. The mechanical factors are sort of taking it over a little bit as far as shorts trying to cover and things like that. So you're going to get a little bit of volatility in the not too distant future from it. Realized vol actually is pretty low. It's one of the few stocks where realized vol is not doing anything. But the implied vol is trading at a pretty brisk premium, mostly because I think the puts are so expensive. And we'll see what happens with it. But I think somebody's just buying the cheapest put they can find, and sometimes that happens to be a year and a half out and $300 out of the money.
The fun thing is they keep piling in, 50 here, 20 here, 200 here, it's just weird. If you had a size institutional position you were hedging, you would assume you would put it in larger chunks than that, so the trickle.
I think
the trickle is interesting.
Your show is moving the market. People are like, okay,
I'm gonna, very well be. We have since we started talking about things, we've added a couple of thousand. We should be charging those brokers putting those bad boys up. But you're right, a little bit of the gold old options insider radio network effect, the halo effect, if you will. People are saying, maybe I should sling myself some of these good old fashioned. There's certainly a bid if you want to sell them, and certainly some offers if you want to buy them. So a nice little robust market in these nonsense mystery Tesla puts. One more here for the odd block. We're odd block heavy today, but it's fun. Let's go back to one we talked about back about a month ago, Mr. Rock Lobster, one of your favorites here. Good old SBAC, not the Small Business Advocacy Council, no. SBA Communications, ticker symbol, of course, SBAC. Closing today, not a great day for them, off about 1.5%. It's closing 132.42 today. We want to go back to May 18th. That's when we profiled someone coming in closing up on a size out of the money vertical. It was about almost 6,000, 5,900 of the 150, 155 vertical call spreads there, paying 67 cents for that. Back then on May 18th, the stock was about 132 or so. It actually got as low as 126 that day, so it was a pretty volatile day out there. It was around the low 130s. This is a pretty far out of the money and pretty longer term call spread out there. And sure enough, we like to go back. We try to do more of this, kind of looking back at some of the names we profiled, some of the trades we profiled, and see how they worked out. Again, size money, not always smart money. This one's a little bit interesting, informative as well for a couple of reasons, because this guy was timed right. He actually was timed pretty well. He picked a nice low and a nice bottom in the stock. Ever since then, the stock rallied pretty good. It got to as high, shortly after that trade went up, it got as high as about 138. Our friend had good timing on both end because he put it on the 18th. Stock rallied, about 6 or so handles, and then he turned around and dumped this spread on the 30th. So he closed it out, and right around that time was pretty close to the high. It hit 138.25 on the stock. Did touch 140 the next day, the 31st. He missed about 2 points of the stock rally, but that's nothing to sneeze at. It's a pretty good timing on this part. And yet when he did it, he put the trade on for 67 cents. So he bought it for 67 cents. When he dumped it, he sold it for about 80 cents. He sold about 11,800 to be precise in one block of the 150 calls for 230. Bought about 11,800 for about $1.50. Did the rest around those prices. So about 80 cents. So all that timing, all that, he was right on everything else. He picked just the strike selection, month selection, not the best on this one, because he did all that work for a nice whopping 13 cents. Granted, it's nothing to sneeze at. It's still about 75 grand. So it's good money, but he could have done so much better, Mr. Rock Lobster, if he had just gotten a little bit closer to the fire, a little bit closer to the front month on this one. A little bit more bang for his buck. I mean, he wanted to buy himself some time. He clearly wasn't certain. Maybe he was surprised by how right he was. But he was well-timed going in, well-timed going out, and yet the fact that he just bought too small of a delta, really, to do anything with, it didn't work out in his favor. Is that your feeling on this one as well?
It is. What's the net delta on this thing? Okay. So even with the stock where it is right now, the net delta on this trade is 6. So you make 6 cents for every dollar in rally. So the stock has to go up $1 jillion to make any money on this trade. Sorry, it just made me laugh a little bit.
So there you go. If you wanted a painful lesson in delta and its impact on your trading, there you go. The guy was well-timed on everything else, not so much on the selection of his strikes and months. And as a result, he didn't make anywhere near what he should have when he was pretty much right on a 6 to 8 handle run in the underlying. That's a pretty good run, and yet he didn't really make the bang for it. I'll take a 75 grand, but it could have been a lot more. Speaking of a lot more, we got time Monday. It's time for your questions. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Like the man said, the portion of the show where you guys get to roll and ask some questions, some comments, slam the rock lobster, all that fun stuff you know how to hit us up. I won't belabor that. Last week we asked our people, Mr. Rock Lobster. We like to ask you guys questions too, by the way. With VIX, at least last week, giving up the ghost. Where are you looking for some new sources of volatility? We gave you crude oil, metals, FX, or maybe some individual equities like the aforementioned Tesla. You guys came in 33%, picking pretty much crude, saying that was the place. 27%. I thought Tesla and those, you ever throw that in there, usually that name tends to win, but they got down to about 27%. They were winning for a while with about 50%. So late votes rallying in for crude and then metals and FX tying. This week we actually shows you how things can change in the span of a few hours. We conceived this pretty much over the weekend, posted it, I think, late Sunday night, early Monday morning. And of course, by the time everything came out, so we saw VIX in a different paradigm. That said, we asked you, hey, last month, about 40% of you said the VIX wouldn't break 9 this year. Recent events, including testing that low of about 937 last week, a historic low print in the top 5. How low will VIX get again in 2017? We're asking you one more time. Will it still not break a 9, or will it maybe flirt with 8.5? Will it break 8, or are you going to go in the look out below mode and say 7 handles in the near future? Mr. Rock Lobster, you touched on it a little bit at the top of the show, so I have a feeling I know where you're falling, but where are you coming down on this ever elusive VIX cash and where it's going this year?
I would say, first, just before we hit that, just think about this for a second. Tesla, and everybody's asking about vol, right? Tesla at a huge valuation is less volatile than crude. Think about that from last week's question. Everybody's just, the fact that Tesla is just, there's no vol and it's a massive stock, that kind of blows my mind a little bit, just that, the finding from the poll. I think VIX will break 8.5 once intraday. I don't think it'll be more than that, but I think it'll break 8.5. I'm thinking most of the crowd will say it won't break 9.
Yeah, you're leaning there, and that's the way they were leaning when we first did the poll, and it seems like recent events may have colored their perspective a little bit. Of course, VIX cash rallying hard today, flirting with 3 handles north of that, 1237 today. So the lion's share of people coming in, at least so far in the early voting. We got all week for this thing. I got a feeling it's going to evolve a little bit, but almost 70%, 69% saying it still won't break 9, Mr. Rock Lobsters, and then the rest. 23% saying way the hell down there. Look out below. So look out at 7 handles coming. So there you go. And 8% saying it won't break 8. So weird voting here. I'll be interesting to see. I think the Barclay's research is kind of interesting. If you see those puts coming in, we could flirt with some levels. And of course, if VIX was trading since 1960, we'd actually see about 10% of the data points would be below 10. So it wouldn't be as rare as perhaps we've made it out to be with our limited sample set here in recent years. All right, we got a bunch of questions, but I like to make the live people feel the love too. We got this one coming in live from Sal06. This is a name we haven't talked about, I don't think, on the show. I don't know if ever, Mr. Rock Lobster. Shopify. So pull up your Shopify quotes. Mr. Sal06 wants to know, hey, I'm just wondering if you could help me. I have a 100 strike call, I think what he means to say, for Shopify at an average of $5.88 that I bought a week ago. Ooh. Do you think I have a chance for it to recover? Well, I'm looking here. He doesn't specify what month. I'm hoping for his sake that it's not the June part. There's no way these things are trading $5 a week ago. The stock is off. Shopify trading today, 88.89 where it closed, off about $2.50 or nearly 3%. Let's see where these June pars were trading just about a week ago. They were trading about $2 to $3. They were not trading $5, so I don't think he bought here. He must have bought out. I would hope for his case at least at least a month or two. Let's see here. These the June pars, the July pars were trading in that level. They were trading they were trading in the 5 to 6 handle. Even hit 7 back a week ago. So he could have some July pars, Mr. Rock Lobster. So let's scroll down to there. These things are trading now about $3, $2.75 at 310. So he's off roughly 50% in his position. Not a ton open there, about only 1,700 contracts. This is not a name I really watch at all. He's kind of asking us more about the underlying than the options themselves. We can get to the options in a second. Do you guys talk about Shopify at all over there in the old pitch chat? And you got any thoughts here for this guy and his much beloved and perhaps much bemoaned July par calls?
I don't even know what a Shopify is. What the heck is a Shopify?
Let's pull it up. It is a cloud-based multi-channel commerce platform designed for small and medium-sized businesses. So there you go. I clarified it all for you. Have fun.
Okay, I was frantically looking for the ticker on this thing.
Shop.
Is it Shop?
SHOP. So yeah, he's got.
This is
exactly,
not a good one.
Exactly.
This is not good.
You're seeing it now too. I'm assuming he has the July pars up, and these are hurting. He's off about 50% in these bad boys. This is this is the conversation I'm sure you have with a lot of your mentees. First, when you put these things on, you got to have some sort of pain threshold where you're willing to take it off. 50% may be at that level. He's still got a bid close to $3, $2.75. This might be a scenario where, again, I have to look at the underlying for this one. I haven't looked at the fundamentals. I'll pull up a chart while you're looking. This thing has been rallying hard, but of late, looks like about less than a week ago, this thing got its wings clipped pretty aggressively. It was trading 96 just about a week ago, and here we are about 8 handles lower than that now. So again, I don't watch this one. I don't know what's driving it lower, aside from the general tech malaise that's going on right now. But I gotta think when you're teaching people to set up trades, Mr. Rock Lobster, even something like this is just straight up naked call buy. You got to have some sort of risk parameter built in when you put it on, correct?
Yes. What is one of our pro guys? He's really funny. He said, "Lose small." So, I mean, if you buy a call and you're wrong, and if the term is short, unless you're right, I mean, relatively quickly, hit the exit and look at it again. I mean, if you're spending $5.88 for a call, I wouldn't want to lose more than 50 cents on it. And because that basically means that's, with the delta of the call, you're just wrong. So, and just close it. It's very hard to buy calls like that, and on short duration without risk control. You're just going to, one might, a couple might hit where you just totally hit it out of the park. But if everything else just goes to zero, it's going to be hard to ever make any money. So, I have a sneaking feeling though, because the stock was at 102 last week. This might have, I guess, the July. Hopefully, it was the July pars for them, but the stock's down $12, so it might have been the Junes. The Junes, you got an outside chance for them to come back, but it doesn't look. I would say the Junes, from a just probably, they peaked at $4, so it's got to be the July calls. You got a shot with the July calls if the froth in the market comes back, because this was a $20 stock a year ago. It's up 5-fold. So I would be, if anything, I would be reducing. It's just no fun, unfortunately.
Yeah, I wish we had good news for this guy. Like, there's some hidden technique you could use to make it all come back again. Unfortunately, it isn't the case. That's one of the reasons why we say when we set up these things. I know Rock Lobster likes to get his juice for free. He doesn't pay for anything. But if you're going to pay for something, at least to have some sort of short leg, a spread, something offsetting some of this massive premium outlay. And you bought this thing for $5.88. That's a lot of money. Have something else, another short leg, maybe a short put leg you're using to finance this. Something, a long call vertical leg, just something to reduce that outlay, so you don't find yourself kind of so up the creek so quickly with these kind of massive premium outlays. And like I said, I wish I'm going to dig into this underlying a little bit more, see if I can find out what's causing this massive sell-off. I don't want to come off like we're some sort of experts in what's driving Shopify itself. We're not there. But on the option side, unfortunately, when you're down close to 50%, and this thing is going to pretty much just continue to erode from there, you may want to consider maybe at least Mr. Rock said, at least he put it euphemistically, at least reducing. I think probably you might want to close this guy out, save some premium you got, and maybe look to reestablish at a strike that's a little bit more reasonable, maybe with the vertical this time rather than just a straight up call buy, or maybe do a vertical finance with some farther out of the money puts so you don't get bid on that, and then you can finance that a little bit more, and all of a sudden you got a position, you got some long deltas again, you didn't spend a lot to really put it back on, and if there is a rebound, if you're feeling that's going to happen, that could be a better way for you to proceed. Again, we feel your pain, sir. We've all been there. So let us know how it works out for you. Meanwhile, though, we got to spend all the time on the live question, Mr. Rock Lobster, but I love to get people alive. I think we got time. Let's see. Maybe we can squeeze in one more on the there we go. We can do this one quickly. This one comes from Lilith. And she says, I agree. This is kind of a comment I think we had earlier a couple of weeks ago. I think Mark was on the show. I don't think you were on. Someone wrote in saying, hey, I think all options should be European because that would help retail because assignment risk scares them away. This woman agreeing, I think she has a little bit of backwards. She said, I agree the options market would benefit from more American options. I think she meant European. I'm just going to insert that for her. Since the assignment process is confusing and risky, if they were all American, they would all be getting an assignment process. I don't know. I didn't agree with this. I don't think Mark did either. The notion that retail is, staying away because of the nuances of American-style exercise. That said, what are your thoughts on that, Mr. Rock Lobster? You didn't have a chance to weigh in. And then do you agree here with Miss Lilith, who thinks that's the way to go?
Sounds like I need to do an option exercise class.
Yeah, it sounds like it's a confusing thing, huh?
It's actually, there's nothing confusing about it. It's all mathematics. And in general, exercise means less risk. Assignment means less risk than you had before. It might be more margin because you have to put up money for long or short stock. But from a risk point of view, it's actually less risk than you had when you had the option in the first place. I know that might be confusing, but that's what it is. But I would say there's nothing, it's not confusing if you spend a little time thinking about it. But the reason, one of the big reasons the OEX kind of died and the SPX grew was because of American exercise. Everybody would be trading all these big spreads in the OEX, and then there'd be a massive exercise, and the market would move huge the other day, and people would get killed because they lost their delta. All of a sudden, instead of having a spread, they just have one naked side because everything went for, all the exercise options went for cash. So I agree that I think index options are a good European exercise. I think having European exercise with equity options would kind of kill a lot of the value because a lot of people want to acquire stock with them. So it's important to understand what you want to do with your position before you do it. I think a lot of people just go sell some options and then they worry about the consequences later, which I don't think is the best way to go about using options as an investment tool.
Agreed. Oh, yeah, Sal just chimed in. He does have the July calls, so we were right about the strike at least. I'm sorry about that, Sal.
Sorry.
Hopefully it will turn around for you. Meanwhile, we got to keep on rolling. Show's not going to turn around for us. Show's pretty much done. We got to get into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right. We mentioned at the top of the show there is some stuff to watch this week. We have the Fed once again stirring up the pot a little bit, kind of looming on the radar. I think we mentioned before, CME's Fed Watch tools up to 96% or something crazy along those lines. So the prices, the odds of something happening fairly soon are, shall we say, high. We got some other economic reports coming out this week. Of course, Tucson's not here, so I'll be the one talking about his levels in the S&P. We are, at least today, kind of unched, but that 2,400 level still looming. See if we can maintain it against some pressure perhaps coming up. And we'll see, of course, the lingering impact of this, if it's going to be just more of the quick VIX spike and then nice quick erosion back to, shall we say, a 9 handle, or perhaps if we're back, dare I say it, Mr. Rock Lobster, back in a higher volatility regime. What say you? What are you watching the rest of this week, sir?
I think we have a little bit of Fed, and I'm seeing, if really what was the reason for the tech crash? I'm not, besides just sovereign wealth fund dumping some stocks, Goldman trying to scoop a bunch, before we take the next leg of a rally. I mean, you got to be realistic. Google's at 1,000, Amazon's at 1,000. It's not unreasonable for them to pull back a little bit from where they were. So that's really, those are the big things. Because ultimately, tech has been driving most of the market rally this year, probably 5 stocks. And I thought it was getting a little long in the tooth a couple of weeks ago. I still like the Qs until all the valuations get insane again, like in 2000, and then I'll just get rid of my Q stocks and wait.
Yeah, that might be the situation we're all in. A lot of waiting and seeing these days. Not so much earnings, but still some interesting stuff on the old horizon. Unfortunately, that music means we're done. We gotta get out of here, listeners. But before we go, one last time, let's check around the horn. Uncle Mike can't be here, so I'll plug him for you. Head him over. M2saw at rcmfs.com. We'd love to hear from you. Maybe you want someone to roll your puts, babysit your positions. So maybe you got some calls. You want someone to help close them out if they're going against you. Uncle Mike can do that for you too. And he's got some nice deals over there. No ticket charges, pretty low per contract fees at a bunch of brokers you've heard of. So check them out. M2saw at RCMFS. Hit him up. Give him some love. Give him a hard time too for not coming on the show today. Couldn't make it. So there you go. How dare he take a vacation in this summer season? Who does he think he is? Speaking of taking vacations, Mr. Rockoff just came back from one. Sounds like you're working on perhaps a new masterclass, perhaps in the area of exercise and assignment, sir?
I think that will be something maybe I produce here pretty quick for everybody. But right now we have a VIX class on how to actually trade VIX right at the end of the month in June.
How to trade VIX right. Interesting. I like that. So check that out, listeners. Optionpit.com so you too can play along. Maybe take a masterclass while you're over there as well. And on behalf of the Rock Lobster and Uncle Mike, wherever the heck he is, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff you guys do, including those of you who listen live. We love you guys to the hardest of the hardcore. And we'll see you on Thursday for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.